Do you have less than $50 and you want to start investing and start building your wealth and build your passive dividend income? Stick around till the end of this video and you will know exactly how you can do it. Hello there YouTube, welcome to my channel. This is the Frugal Investor. In this video, I am going to give you guys my top 3 dividend paying companies below $50 that you can add to your portfolio and start earning that sweet dividend passive income. All these 3 companies are blue chip stocks with strong history of paying out dividends and strong financial numbers. I personally own all these 3 companies in my portfolio. With that said, let's get right into it. The first company on this list that you can add to your portfolio today is Bank of America. Bank of America is the second largest bank in the United States after JP Morgan and Chase, and it is the 8th largest bank in the world. The bank is currently trading at $28.34 as of today. It is down 15% over the year and is up 70.77% over the course of 5 years. The company is still trying to gain its before pandemic highs, which was $34.36. It's slowly climbing up. Bank of America is special. Warren Buffett bought 1.7 billion worth of Bank of America stocks. That is 11.8% of the company. He has a bullish stance on Bank of America, as he believes the stock will continue to rise in value and is very much undervalued right now. The market cap for Bank of America is $247 billion. The dividend yield is 2.52%, and the P by E ratio is 16.37%. So the P by E ratio within 15 to 20 is considered good. Buffett, he has a bullish stance on this, and for the right reason. The reason is strong dividend history and its cash position. We will go deep into that right now. So since we are dividend investors, let's look at the dividend. The dividend yield is 2.52% and the payout ratio is 41.25%. That is, they pay out 41.25% of every dollar they earn in profit to its shareholders. The dividend has been growing over the past 7 years and the 5-year growth rate is 40.63%. That is huge. Now, if we look at the dividend history for Bank of America, the bank has been continuously increasing its dividend over the past 7 years. It has never missed a dividend over the past 22 years. The dividend did go down significantly during the 2009-2010 recession, and it stayed down till 2014. Before the recession, the dividend was 64 cents. So now it's climbing up slowly by slowly, and I think it will reach its heights of 64 cents again within no time. So that is one of the reasons Warren Buffett invested in this stock, because this stock has to see a lot of growth in the coming years. The second reason this stock is attractive to investors like Warren Buffett and me is its cash position. If we look at this article from Motley Fool written in August, it describes exactly Bank of America's cash position is. Bank of America has a CET ratio assigned by the government at 9.5%. A CET ratio is a ratio given to the banks by the federal government according to regulations that much amount of money they have to have in reserves in case of any recession or pandemic to cover for the losses. That CET ratio is 9.5% for Bank of America. Other than the CET ratio, the bank has additional 2.1% of buffer. While JP Morgan has 1.1%, Citigroup has 1.5%. So the bank has additional $28 billion and it has set aside additional $10 billion to cover for potential losses in the coming quarters in case the economy shuts down again. So the bank is in a very solid position. This sentence right here summarizes it. The bank can absorb a lot of losses even if the economy shuts down. The pandemic keeps on banging on, the economy keeps on losing money. The bank can still absorb those losses and still keep a strong capital position. Executives said that even if the bank did need to set aside enough reserves to cover losses amounting to 4.7% of the total loan book, the total CET ratio would still only fall to 10.25%. still solidly above its required threshold, which is 9.5%. This right here is the main reason why Warren Buffett loves Bank of America so much, and why I love it and I keep it in my portfolio. So if I take you to my portfolio, I personally own 18 stocks of Bank of America in my portfolio, which I bought at $27.18 per stock, and it is right now trading at $28.31. These 18 stocks give me a dividend of $12.20 per opinion. Bank of America is a strong buy and is a great company for any person who is investing for long-term dividend growth and is looking for solid, stable companies. Moving on to the second company on this list. The second company that's on this list is Store Capital. Store Capital is a real estate investment trust, a REIT, that invests in single tenant retail properties occupied by retail, service, and manufacturing industry tenants. Store Capital is also special because Berkshire Hathaway, owned by Warren Buffett, owns 9.6% of Store Capital, bought it at $22 a share, and have roughly $500 million invested in Store Capital. The stock is down 15.46% over this year and is up 43.80% over the course of 5 years. The stock is currently trading at $32.59, which is very much lower than its before pandemic heights of $39.43, but it is slowly climbing up to that number, which makes me believe that this stock is still undervalued. The market cap for Store Capital is $8.54 billion and the dividend yield is 4.42. They pay out a dividend of $1.44 per stock per year. The payout ratio is 78.80%, which is average for a REIT. That means they pay out 78.80% of their profit of every dollar they earn to its shareholders. REITs, their payout ratio is generally higher for tax benefits. The dividend has been growing for the past 5 years. If we look at the dividend history, for the past 5 years, the dividend has seen a stable increase. It's currently giving out a dividend of 36 cents per quarter. The REIT has 99.6% occupancy from its tenants, even during the pandemic. It has 511 customers spread out across 49 states in 2,587 investment property locations. The tenants are well spread out and diversified across the retail, manufacturing, and the service sector. Main tenants that own 17% of Store Capital are Bass Pro Shops, Love's Furniture and Mattresses, AMC Theaters, US LBM, Ashley Home Stores. I personally own 15 stocks of Store Capital, which pay me a dividend of $21.60 in 1 year. The third company on this list is not a stock, it is not a REIT, it is an ETF. The name of this ETF is SPHD by Invesco. The ETF is currently trading at $37.77, low by 11.76% for this year. Past 5 years, the ETF has gained 17.48% in stock gains. Before pandemic, the ETF was trading at $44.35, and right now it's $37.77. ETF cherry picks 50 least volatile, high-yielding S&P 500 stocks. Has an expense ratio of 0.30%, which can be high for some people, but in my opinion, it is median. It's not too high, it's not too low. Since we are dividend investors, let's look at the dividend. It pays out a dividend of 4.84%. Annual payout is $1.84 per stock of this ETF. The 5-year growth rate is 10.97%, and it has been growing over the past 8 years. If we look at the dividend history, this ETF has continuously paid out its dividend over the past 8 years and is currently paying out a dividend of 15 cents per quarter. ETF has produced a growth of 9.16% since its inception. So the growth is not that high, but the dividend is great, and that's the reason I personally own this in my portfolio. This dividend is not very well liked by some investors, but I really like it. That is because of the dividend and the diversification among the 50 companies that it tracks. So currently I own 39 stocks of this ETF. which pays me a dividend of $71.72 annually, which is huge. And that is why I love holding this in my portfolio. And I think it is a great buy for any investor who wants to earn that sweet dividend income below $50. So these are the top three companies that I hold in my portfolio, which I think are great dividend picks for anyone who's looking to invest who has less than $50 to start with that you can own in your portfolio as well. My name is the Frugal Investor. If you like this type of content, like, comment, subscribe to the channel, and leave me a comment down below which ETFs or which REITs or which stocks you like the most. With that said, thank you for watching and see you in the next one.